Where on earth did the stability of oil prices disappear to? Just 3 years ago, oil moved slowly, sometimes a few dollars per month. But now, oil can jump $5 in a single day, sometimes $10 in a week. In 2020, oil even briefly traded below $0. Yes, negative. According to the Energy Information Administration, the price of Brent crude moved between about $20 and $130 per barrel between 2020 and 2024. That is a 600% range. Now think about this. You all buy gasoline. You heat your homes. Food gets delivered by trucks. Oil is not just energy. Oil is the blood of the global economy. So the question becomes simple. Why has the oil market suddenly become so unstable? Was it really just one tweet? Or is something deeper happening beneath the surface? Today, we are going to investigate this like a mystery. We will follow the clues. We will follow the money. And by the end, we will uncover the real reason oil markets have become so volatile. But first, let's start with the first clue. Supply and demand. According to the International Energy Agency, the world consumes about 102 million barrels of oil every single day. That is roughly 4.3 billion gallons per day. Now imagine something. If supply suddenly falls by even 1 million barrels per day, that is less than 1% of global demand. Yet that tiny change can move prices 10% or more. How can such a small change cause such a big shock? The answer lies in a concept called inelastic demand. Inelastic demand means people cannot easily reduce consumption when prices rise. For example, if gasoline rises from $3 to $5, most people still need to drive to work. Truck drivers still deliver goods. Airlines still fly planes. Demand barely moves. And when demand cannot adjust quickly, prices become extremely sensitive. This is our first clue. The oil market is structurally fragile. But that alone does not explain today's extreme volatility. So let's continue our investigation. The second clue comes from investment. After the pandemic in 2020, oil prices collapsed to around $20 per barrel. Oil companies lost massive amounts of money. According to S&P Global, global oil investment fell from roughly $525 billion in 2014 to about $320 billion in 2021. That is a drop of over $200 billion. Why did companies stop investing? 2 reasons. First, investors were demanding higher returns. Second, the world began transitioning to renewable energy. Many governments began promoting energy transition policies. But here is the problem. Oil demand did not disappear. In fact, global demand fully recovered by 2023. So now we have a strange situation. Demand is strong, but supply investment is weak. Economists call this a supply constraint. A supply constraint means production cannot increase quickly. Even if prices rise, building a new oil project can take 5 to 10 years. Exploration alone can cost $100 million or more. So when demand suddenly increases, supply cannot catch up. Prices explode. Stay tuned for the next video.